How do I make sure a co-owner can't come back after the sale and claim reimbursement for maintenance or try to file a lien? The safest approach is to treat the closing as a full settlement between co-owners, not just a simple note telling the closing agent who gets what. Before closing, put a written, settlement-style agreement in place that clearly lists the expenses and advances that will be reimbursed from the sale proceeds, and, just as importantly, says that no other maintenance or carrying cost claims will be paid. Then, include mutual releases where each co-owner gives up any known or unknown contribution or reimbursement claims tied to the property through the closing date, except for any narrow items you both agree should survive. Because some categories, especially property taxes and sometimes special assessments, can give a co-owner statutory reimbursement rights and, in limited situations, a statutory lien, the agreement should address those categories directly and require lien waivers and recordable releases when appropriate. At closing, require each co-owner to sign the closing documents and any title company affidavits confirming the final payoff and distribution, and agreeing not to file any lien or claim after closing. Finally, keep the settlement statement, proof of payments, and signed receipts or releases, and, if there is any risk an item could be treated like a tax-type lien, have a recordable release signed at or immediately after closing. The key is timing. Get the final accounting and the releases signed before the deed is recorded and the money is disbursed, because after closing, your leverage drops and disputes get harder to fix.